Hello, dear. Start over editorial The Hindu. Not matter how to read, but you read. This is matter, but you try and try. Okay, now start. Not losing steam on latest industrial output estimates. The capital goods data pointed to continuing uncertainty on the private sector investment front. The latest industrial output estimates from the National Statistical Office (NSO) indicate an across the board loss of momentum in December, with overall production growth slowing to 4.3% year on year from November's 7.3% pace. Pace means speed. While activity was unchanged or moderate across all the three constituent of the index of industrial production. First, mining, second, manufacturing, and third, electricity. The largest sector, manufacturing, with a weight of almost 7.8%, was the biggest drag as the expansion declaration to 2.6% from the preceding month's 6.4% increase, assessed on a sequential or month on month basis. Mining and manufacturing posted slowdowns, with only electricity growing 7.6% in the wake of November's contraction of 1.5% manufacture, where the sequentially growth slowed by more than 2 percent points to 4.7% from 6.9% in the previous month, was weighed down by three of the six use based sector, including consumer durables, in consumer non durables, and capital goods. The three categories reflect a broader trend in the economy. For one, private consumption is still to regain an enduring footing, notwithstanding a post pandemic surge in pent up the spending, most visible in the service sector, and production of consumer durables shrank 10.4% year on year and 2.4% sequentially in December, after rebounding in November following festival demand. And non-durables experience a sharp sequential deceleration, with growth breaking to 7.4% month on month. The capital goods data point to continuing uncertainty on the private sector investment front. Production of the plant and machinery order, when expanding to starting venture, is struggling to sustain momentum, with output growth sliding appreciably both sequentially and year on year in December. Growth from a year earlier in the segment slowed to 7.6% compared with November's 21.6%. Month on month, the slowdown was stark, starker with output barely in changing up 0.2% after expanding 13% in November. However, primary and infrastructure and construction goods offer hope that some positive momentum and can be built on with the right policy measure. While the sequentially pace of growth for primary goods output quickened to 9.2% from 1.1%. The month on month advance for infrastructure and construction ticked up to 4% from November's 3.2%, with the RBI survey of the manufacturing sector outlook indicating firms expect some opening in order booking and overseas demand in the current quarter. A lot will hinge on policy staying supportive. The union budget plans to provide a push for infrastructure through a sustainable increase in the government's capital expenditure should provide a big flip motivate what I meaning flip motivate to construction goods and is likely to feed through to other sector as well in the coming month. Thank you so much.